Hello, everyone. Welcome to the Crystal Ratings podcast on the trends and developments in the Indian securitization market. In this podcast, we will cover the market volumes in securitization for the first quarter, April to June of this fiscal 24. Overall, securitization volumes surged around 60% on year to clock rupees 55,000 crore on strong demand for retail assets from banks, coupled with increased use of securitization as an alternative funding route by NBFCs. This is the highest ever volumes in a fiscal first quarter. The participation demographic continued to be broad based like last fiscal, with over 80 originators and 50 investors. The number of transactions also went up from 160 in the first quarter of last fiscal to over 250. Private and public sector banks continued to be the dominant investors, followed by foreign banks. With the momentum in NBFC credit growth and continued investor interest in retail loan pools, we expect the annual securitization volume to cross the previous peak of over 1.9 lakh crore in this fiscal. I will now delve into the market trends covering two aspects: one, the asset class, and two, the securitization route, being pass through certificates, that is PTCs, or direct assignments, being DAs. Firstly, in terms of asset class, the share of vehicle loan securitization surged to 37%, an increase of 9%, primarily driven by the top originators in the commercial vehicle segment who have relied on securitization as an alternative funding tool to support their strong credit growth. Mortgage backed securitization share stood at 34% in the first quarter, a drop of 13% in share. The market share of other two large asset classes, that is microfinance and gold loans, remained steady at 10% and 8% respectively. Secondly, in terms of the securitization route, the share of direct assignment and PTCs were equal at 50%. For direct assignment, this is a drop in share as compared to the range of 55 to 65% seen in the past three fiscals. We expect the share of direct assignment in mortgages to reduce further given the merger of a large originator in the housing finance space with a bank. Consequently, PTCs will gain share in the market. With this, we come to an end of this podcast. Thank you for listening in. Take care.